Still decidedly down from that 2011 top, and the volume is decidedly up. What does that mean? Well, I think the obvious conclusion would be it's taking more and more paper silver to keep this price down. That would be my conclusion. So, but we're going to spend the rest of the time here looking at this Jeff Nielsen article and some silly controversy surrounding that. It started off with Jeff citing me. We're going to get into that. But first, I want you to notice one thing before we go into this. So, we got a silver price here at $15.64, and we've got a gold price here at $11.58. So let's do a quick gold silver ratio. $11.58 divided by 15.64, and that's 74 exactly. 04. So close enough. So keep that figure in mind when we look into this. That's going to be an important figure. 74 to 1 is the current gold silver ratio. So let's get to the article that I'm talking about here. This is actually part 2. It was part 1 where Jeff cited my reference to a long-term chart that showed, at least it seemed to indicate to me, that there was some type of base price. Some people misinterpreted that, thinking that it was an average price. It wasn't an average price. Let's pull up the chart and look at it. This is a chart we were referring to, and what I saw in this chart was that $5 seemed to be an established reference. I'll call it a reference price because it's not the average price. You can see these spikes are enormous, both the 80 spike and the 2011 spike. But it just seems to be a target price, a reference price that silver has traded around for a long time. You can see in the 70s it shot up to that price, then shot way beyond it, then corrected back below it, then kind of averaged around to it until it exploded in the last rally, and now we're down to 15. So are we going to get back to 5? That would be unbelievably fantastic for stackers. To see $5 silver. Now, we saw $8 silver in fall of 2008, but I know for a fact that no one could get it at that because I was buying the cheapest. That's actually the only time where I was buying as pure bullion as you can possibly buy. And I know because I was doing it literally at 5 in the morning, looking at prices constantly as this financial crisis was unfolding. And I wasn't able to get any silver for below $12 an ounce. Maybe some people out there were, but when silver hit 8 to 850, I was seeing 12. And that's where I bought some of my silver. Now, a lot of the coins, I bought some Buffaloes for $12. But I also bought some koalas for 14, and to tell you the truth, the koalas have done a lot better than the buffaloes. So as you those who've followed me, you know that I'm not big on the regular bullion. I'm big on the collectible coins that are just a little bit more than the regular bullion, and I think I've demonstrated that multiple times. But anyway, let's get to the story and keep that 75 to 1 in mind here. This is the second part here. Part 1 of this series provided what for some is a revelation, the absurd $5 face value on our legal tender minted silver coins is not some totally arbitrary anomaly. Rather, it was a part of the strategy of the one bank to pretend that its fraudulent paper currencies were not and are not losing value at a catastrophic rate. The banksters did this in a multi-pronged approach. They selected the approximate price for silver which existed at the time that Paul Volcker assassinated the gold standard and used that number, $5, as their nominal face value for our coins. Then they attempted to freeze forever the market price for silver at that $5 level. It was never a viable long-term strategy, but being psychopaths, that didn't stop the banksters from pursuing it. While our mystery is solved with respect to our silver coins, what about our gold coins? Here we can be unequivocal. The face value of our legal tender gold coins is entirely arbitrary in absolute terms. At no time since Volcker assassinated the gold standard has the price for gold been lower than $200 an ounce, and for most of the time it was above $300 an ounce, many multiples of the ridiculous $50 face value. Those playing devil's advocate could argue that the reason our coins currently have a $50 face value in both Canada and the US was because Canada originally chose that face value when it began minting gold maples in 1979. The rebuttal to that line of reasoning is simple. When has the United States ever considered itself bound by any standards set by any other nations? The one bank has consciously chosen to have the U.S. act as a rogue regime in virtually every sphere of international relations. It regularly initiates unilateral acts of war, and while it regularly signs various treaties with other nations, i.e. trade pacts and arms limitations agreements, it finds it impossible to abide by the terms of these international agreements for any length of time. Let me step in here and say that for the most part, I agree with this. I'm not sure I agree with the one bank theory. I would say there's some more nefarious characters behind the banks. But you see, the United States is kind of the military arm of whoever these people are. And if you look at all the anti-Semitism and banking stuff, blaming the Jews for everything, the Jews are kind of like the banking arm. So whoever this power is, and that's for you to decide who you think it is. But it seems that they're using Jews as the monetary muscle, let's say, and the U.S. as the military muscle. But let's continue. Clearly, if the U.S. government, meaning the one bank, would have preferred a different arbitrary face value for its own minted coins, it would have chosen that number and then pressured Canada's government mint to accede to American standard. We must therefore conclude that the nominal $50 face value on these minted gold coins was a deliberate choice and not merely some accident of history. With the $50 face value having absolutely no significance in absolute terms, we must look for relevance in relative terms, i.e., in relation to the nominal face value of our silver coins. It is here where we gain further insight in the form of the price ratio 10 to 1. Historically, over literally thousands of years, the gold-silver price ratio has remained relatively constant, near 15 to 1. This price ratio is a natural reflection of the supply ratio of the two metals within the Earth's crust, 17 to 1. Yet we're told via propaganda of the corporate media that the normal price ratio for silver to gold is supposedly in the range of 50 to 70 to 1, the perverted extremes which are or the direct product of the one bank's serial suppression of the price of silver. Even as the physical supply ratio between these two metals has steadily narrowed due to the destruction of silver stockpiles, the corporate media has maintained this ludicrous fiction regarding the price ratio. Yet here we get a rare glimpse into the actual thinking of these banksters regarding the pricing of these metals. So, and then there's a read more here, but I'm going to leave it at that. What I wanted to do at this point is to just delve into this further. Now, you remember that we had that price ratio that we're currently at. It's roughly 75 to 1. So what I wanted to do is take you through the Western powers here, because this is a phenomenon that occurred in the West at nearly the same time. Now, I haven't done the research on this. If those of you have done the research on it, I'd be curious to know. You have these 1 ounce and silver and gold bullion coins, and I'm going to be looking at America, Canada, Australia, Britain, and Austria. So these basically all start happening at the same time. Again, I don't have the timeline, but what I'm interested in looking at here is the ratios, because these ratios are going to be kind of surprising when you look at them. So let's start off here. We're just going to use APMEX. I didn't want to do some article or anything. I'm just going to look at the coins, and we're going to figure them out. So let's start here with silver, and we're just going to go straight to Silver Eagles. And here's your Silver Eagle. And we want to look at the, actually we just want to get one of the coins here. Hopefully I'm not going to have internet problems when we do this, because it's going to take some time. So here we go here. Here's silver, $1. Now this was a little bit of a controversy that came up after Jeff wrote the article, because Jeff quoted it as $5. Well, Jeff's from Canada, and we'll see here in a second, it actually is $5. So in the US, you've got $1 on the Silver Eagle. So let's go ahead and look at the Gold Eagle here, and you'll see here, I'm just doing this so everyone can see, $50. Okay, so we got $1 and we got $50 in the US. So a 50-to-1 ratio. Now let's jump over to Canada and take a look at the gold maple leaf. We're going to look at the main bullion coin of all of these mints. And our gold maple leaf here, you can see, is $50. So that matches the US. But when we go over and look at the silver maple leaf, you will see that the silver maple leaf is $5. So Canada has actually a 10-to-1 ratio, while the US has a 50-to-1 ratio. Now, again, if I make a mistake here, correct me if I'm wrong, but before I did the video here. So I'm very curious to see what China says on their coins. And I guess that symbol is the yuan. I don't know. I'm just guessing. But that panda there is 500 yuan, we'll say. And let's take a look at their silver coin here. And wow. Is that right? I've got to double check that. Is that symbol the same? Looks to me like a J and a backwards J, or a J and an L with a T top there. That's the yuan. That's a 10 on the silver panda. And I'm sure glad I checked this, because this is not something I would have guessed. Sorry about that. I'm sure glad I checked this, because this is not something I would have guessed. Sorry about that. One more time. Yep. So China seems to come in with the same thing that everybody else does. That would probably be, I would say that's the median, is that 50-to-1 is going to be the median. We had Canada way down with the 10-to-1. We have three of them coming in at 50-to-1, one at 66 and one at 100-to-1. Those are the ratios established on these bullion coins. And for the most part, this median of 50-to-1 is way, way outside of reality. So are these the countries that are manipulating the currency system of the world right now? Are these the ones that are in control? I think they are. Britain, the EU, the United States, Canada, Australia, and China, a little bit connected to them, certainly more than Russia and the rest. These are the big players in the manipulation of the precious metals, and these also happen to be the big players in setting these phony bullion ratios. Very interesting. What does it all mean? I don't know for sure, but it's very interesting stuff, and we'll talk to you next time.